I'm Matthew Previte. I'm a CPA here in Massachusetts. Since 1990, my firm has represented taxpayers before the IRS, the Mass Department of Revenue, and other state tax agencies. We are a small tax resolution firm that offers very personal service. I'd like to talk about assessments, which is really the beginning of the collection cycle. Essentially, before you can have a collection problem, a debt problem, you have to have an assessment. And assessments can happen a number of ways, but I'd like to talk about two of them. The first one is you file a return. You prepare a return and you sign it and you send it to the IRS. They process the return, they assess the tax, and then you start getting collection notices. That's one way the collection process starts. The second way is the IRS sends you a notice that says, hey, we don't have a tax return for 2015. And you ignore that notice, they'll send you a second notice. Hey, we didn't hear back from you. We don't have a tax return for this year. Ultimately, if you ignore that, then they're going to send you a notice, hey, we haven't gotten a return from you. Here's what we have on file from your employer, and here's what we're going to assess against you for this tax year. Eventually, if you ignore that, they're going to do what they call a substitute for return, or an SFR. And when they do a substitute return, it's not going to include all your deductions. For instance, they're going to file that substitute return with one exemption. So if you have kids and or wife, no deductions for them. If you have a house, no mortgage deduction, no real estate tax deduction, no medical expenses. They're essentially going to assess a tax in the worst light possible, partly because they don't have all the information that you have to assess the proper tax. So they're going to assess a tax on your income with one exemption and a standard deduction for a single person. And oftentimes these substitute assessments, especially when somebody is self-employed and gets 1099s with no taxes taken out, the assessments are huge. They're 2, 3, 4, 5 times what really would be owed if you filed an original return. So filing an original return, or the government pursuing you if you don't file a return, and filing a substitute return are the two main ways that assessments get on the books with the IRS and start the collection process. It really behooves you to file an original return long before the IRS notifies you that they don't have your return. The longer you wait, it's always resolvable and you always have the right to file an original return, but the longer you wait, the more difficult it becomes and the more hiccups in the process there are as far as getting that original return process quickly so that you can deal with a more accurate debt. So make sure if your returns are more than just a W-2 submitters, get a professional tax preparer, a CPA, a tax attorney, or an enrolled agent. Worst case scenario, if it's a simple return, go to H&R Block, but get a professional to do the returns. I see so often mistakes made on returns that clients prepare themselves with TurboTax. TurboTax is probably my best, referral source for IRS audits. People get a piece of professional software. They may be smart. Everybody's smart at something, but you can't be a jack of all trades. And so unfortunately, they misread the prompts. They do the tax return wrong, and that creates other problems. So hire a professional preparer. It's worth the money. It's going to be insurance that it was done right, that it avoids the likelihood of getting audited, and most of all, you're going to get the correct and the lowest tax legally allowed by law. Please give us a call to answer any of your questions, and if you'd like to set up a free consultation, you'll get to meet with me or talk with me over the phone, whichever you prefer, and we'll go over your situation, discuss your problem, what options are available to you, and give you some information to think about in making your choice for a tax firm. Call us at the number above.